Billionaire investor Ron Barron expects Tesla's stock to go up huge now. He expresses his continued confidence in Tesla despite recent setbacks, believing that electric cars will become the norm in the next decade. Now, he sold a portion of his stake due to diversification concerns, but is now bullish on Tesla's potential, citing the upcoming low-cost cars and their potential to disrupt the automobile industry. Barron also discusses Tesla's robo-taxi plans and the company's significant data collection capabilities, which he believes will be a major source of long-term value.
But I think SpaceX is going to be, I think we're going to make 20 times in SpaceX over the next 15 years. I think we're going to make a quadruple in the next 6 or 7. Can it be too big? Sure. So I'm always watching.
Just because you're managing other people's money.
But I do think that we're going to get a lot more money to manage, so therefore it's going to get diluted down by the new money coming in. Always thinking about how large the position should be, yes. But
so what do you think right now? The stock came out, the earnings this week came out. It was a disappointment for the quarter. It was the worst cash flow quarter that the company's seen in its history, but the stock was up 12% because Elon started talking about what he sees in the future and the idea of bringing out cheaper cars to go through these things. Where do you stand on what the company should be valued?
So I know Joe's not a big believer in electric cars because he likes his Porsche. But I think all the cars are going to be electric, and I think this hybrid is just a sort of a holding off action so the automobile companies don't have to lose money on the electric cars. But the electric cars, I think, is going to be all the cars 10, 15 years from now. And I think hybrids, I know you love hybrids, that's not going to last either. They're too expensive and they're not effective enough, and they're not going to be part of the mix either. So it's going to be all electric. And so what I think is going to happen is that the reason the stock is down is not because of the quarter. The reason the stock is down...
Well, the stock's up because of the stuff that he said.
Well, the stock's down so much.
Well, it's down 35% year to date. It's down 1%, or it's up 1% over the course of the last year.
Yeah, it's not so exciting to be up 1% in a year when everything is, the market is so strong. I don't worry about short term, but I do look around all the time and see everyone getting rich, and I'm not poor, but I haven't made a lot of progress in the last 3 years. So therefore, I think it's like a rubber band. I'm going to catch up again. So what I think about the reason stock is down is because people were concerned that he was going to abandon the idea of having a low-cost car and go all into robo-taxis. That's the reason stock is down. And then there was a report in Reuters said he's canceling this new factory that's going to make low-cost cars, $25,000 cars, competition from China. So there's only one company in China that's profitable, by the way. That's BYD, Warren's company, Buffett's company. And that's a company makes $1 billion a quarter, and our company makes $4 billion a quarter. No one else makes money. Ford loses so much. General Motors, everyone loses money on this. It's much more complicated to make these cars. It's interesting. I was talking yesterday about motors. So motors in a car cost $5,000 a car. That's what the normal, these 100-year-old companies cost them $5,000. We can make a motor for $1,000. Costs $5,000. So they get...
Yeah, but then you have to have a battery that's more expensive.
Oh, no, I'm talking about if you're making the internal combustion engine cars. I'm just talking about how stagnant businesses become and how used they are to operating the way they've always operated, that they don't look for new things to do, new ways to operating oriented toward making things cheaper. He can do things for $1,000 that other people cost $5,000. It's amazing. That's if he wanted to be an electric car, a gasoline car company. All I'm pointing out is that people get entrenched and they do things without trying to make the things better and cheaper and faster all the time. There's no incentive to do that. So Munger says, "Show me the incentives, and I'll show you how people act." And that's the idea, that the incentive, what's the incentive for someone who's 55, 60, we got to get off of this. But the idea is that that's the reason stock's down. And now
So what's the reason it's going to go up, and when?
Oh, it's going to go up huge.
When?
And now. I mean, now is the bottom.
Okay.
And so what they're doing is they're going into robo-taxis, and they're going to make the low-cost car. So they're making the low-cost car, except they have excess capacity right now. They have capacity to make 3 million cars a year. They're making 1.8 million. So there's 1.2 million cars they can make extra in an existing facility with no more capital, and they're not going to make the cars direct cost as cheaply as they did before. as they expected to. But overall, until they expect to do 5 million of these new cars.
Can I ask you a robo-taxi question? Because that is, I think, the future of this company,
Yes.
and a lot of the value is relying on that. The question is what you think the genuine timing of a robo-taxi that's reliant on cameras only, and this has always been the question about can you do it with just cameras relative to what Waymo and Cruise have done, and there's been even questions about that, using the radar and the LiDAR and the whole rig that lives on those vehicles.
Well, we have a small investment in Cruise because I wanted to see what they're doing. And Waymo is, their cars are $250,000.
Because of all of the sensors and all of
And they're trying to take cost out. And for us, it's software. And so basically, the advantage that we have right now at Tesla is that they've sold 6 million cars, and 3.5 or 4 million are collecting data. So the data is what's really valuable. They're doubling their amount of compute every 90 days.
I don't disagree with you. The question is a timing question of how quickly you can actually put these things into the wild.
I was just in California. Last Sunday, I was in Vail because I want to see what they're doing with AI in the mountain and capital spending. And then that was on Sunday. And then on Monday, I was in SpaceX in LA in the morning with some engineers and some finance people. And the afternoon, I went to Tesla, and I was with the autonomous driving people and also the compute people. And then afterwards, they said to me, Ron, would you like to see how we've made unbelievable advances? The first 11 versions had to be designed so that they had to code every single thing that happened.
Right, and now it's all AI.
It was impossible. And so therefore, they weren't making progress for 2 or 3 years. They were at a plateau. And now what's happened, they have version 12. They have all this enormous amounts of data, and now they have compute to figure out. Humans can't do it. Now they have compute to figure everything out. And so now you're on the verge with autonomous driving in your car. So I said, okay, show me. So we do the few hours, couple, 3 hours. And then before I'm going to go back to New York, I say, okay, so I want to see how it works. So we go into the parking lot, and we get into the car, and I have an analyst with me, and then they had the compute person, and they had an investor person. And so we're sitting in the car, and so where do you want to go? I said, I want to see Steve Jobs' house. And say, okay, so they punch in the address, and we get into the car drives around by itself. Didn't do it, all we did is punch it in. Drive around the parking lot, goes to the road, there's traffic going both ways, it looks both ways, looking for an entry to get in, gets an entry, pulls in, makes a left-hand turn, drives right behind cars in front of us, there's a stop sign, first car stops, goes, second car stops, goes, we pull up to the stop sign, car looks both directions, makes a right-hand turn. Just drives. And then all of a sudden there's a pedestrian crossing the street. The car stops to let the pedestrian cross the street. The pedestrian, I don't know if I was being set up on this, but the pedestrian waves, and then the car starts going again. Then it pulls up, then it makes a left-hand turn, and then goes in front of Steve Jobs' house. It's a nice house. It was just a house, though. I was expecting a house, but it was a house. And so stopped in front of Steve Jobs' house. Then he has that house, and he doesn't, his wife does, the house next door. Then they had looks like 3/4 of an acre for sale next door for $15 million. They didn't go back.
That's a little creepy,
it drove
Ron.
all by itself. Yeah, all drove by.
Take me to stalk somebody's house.
Drove all by itself. So what's going to happen is that I thought the idea had been that you're going to sell a lot of cars. So as a result of that, once they have those cars out there, you'll sell autonomous driving. And he said the other day that he's negotiating to sell autonomous driving for some other cars too. No one has the compute, no one has the data.
That's the long-term thing. If Tesla's everywhere, just like
if they're making cars, they make $7,000 in profit a car for a car they're selling for $35,000, minus the $7,500 credit.
But what's your timing? But just give me the timing. That's the whole game.
Now.
Now?
Now. It's now.